The Russian ruble continues to plummet despite the central bank's latest move to defend the currency. Overnight, interest rates here hiked to 17%. At first, that brought some relief, but then the ruble quickly lost those early gains. For more on this, let's cross now to our correspondent Iman Al-Majali. Well, Iman, do tell us about this late-night decision and what it means for the Russian currency.
Well, as you said, the ruble just hit a historical new low, and this is unseen before. It happened just despite an unexpected measure that was taken by the Russian central bank during a late-night meeting at 1 a.m. local time. They've said that there's been a hike in interest rates, and the last time such a steep hike in interest rates was taken was in 1998 crisis. So this is basically how it works. With the hike in interest rates is done in order to make the ruble harder to get in the market, making it more expensive to buy, and therefore supporting it against its decline. The central bank also mentioned during the meeting that the move is supposed to tackle speculations with regards to the decline of the ruble.
A powerful speculative pressure emerges on the backdrop of sliding oil prices and the limited Russian access to financial markets. To ease that pressure, we first of all need those external factors to stabilize. But other than that, speculative strategies should be made more risky, and that's what we are trying to achieve.
So in the early hours, the ruble did see some gains. However, this was overtaken once again with the usual roller coaster coming back at the record highs. At some point, the ruble reached a three-digit number against the euro. There's been actually some jokes about that the currency exchange offices might need to change their digital currency boards outside to bigger ones to fit the three-digit number. But this does not seem to be a joke anymore. It actually seems to be a reality very soon. For now, the trading is still ongoing. The situation is very uncertain, and all we can do is still wait and see how the move by the central bank is going to pay out.
Well, indeed, it's a roller coaster ride for the Russian currency. And of course, as you said, we're waiting and looking at the situation there, analyzing. And speaking of which, we can now get some perspective from Mike Ingram, who's a market strategist at BGC Brokers in London. Thank you so much for joining us here, Mike, to talk about this. So first off, of course, is Russia's central bank decision. Was it right then to raise interest rates? What are your thoughts?
Well, I think they've had to make a very big move because they've been asleep at the wheel now for a number of weeks. Really, the central bank should have been in tightening mode quite a while ago, and that's why speculators have moved in because they thought the currency looks vulnerable. And of course, you know, what have we seen today? You know, the ruble closed at around about 64 against the dollar, strengthened when that surprise announcement overnight came out on this hike to 17% interest rate, strengthened to 58, now trading at 72. The thing is, this isn't a long-term strategy from the central bank. You know, even the absence of an interest rate hike, with oil at about $60 a barrel, it's likely that the Russian economy would contract by 4 to 5% this year, next year. With 70% interest rates and inflation over at 9% in Russia, the economic downturn could be even sharper. So, you know, it's a bit of a waiting game. The central bank can't afford, for the sake of the Russian economy, to pursue this for very long. They have to hope that speculators give up before then.
Well, Mike, while we're all still waiting, can anything be done to perhaps support the sliding ruble, or is the situation just beyond control? Is there anything that could be done? What are the factors, external factors perhaps, and the banking authorities are powerless here, or what's going on? What are your thoughts? Can anything be done at all?
Well, I think fundamentally the ruble is actually looking quite cheap. But I mean, I think the momentum is clearly still against the currency. Clearly, if the US, for instance, were to further tighten sanctions on Russia, that would be currency negative, no doubt about it. And of course, you know, if the oil price continues to slide, you know, the Saudis and the UAE said, well, they're quite happy to see oil at $40 a barrel. You know, if we see that sort of number, then of course there's going to be additional pressure, you know, on the ruble. So at the moment, I think everybody is playing a waiting game. Very few people are brave enough to aggressively buy the ruble back, except perhaps the central bank. It'd be rather like standing in front of a steamroller picking up pennies. But of course, these things can change very, very quickly.
Well, what about the repercussions for the Russian economy and for the global economy, for that matter, do you see here in a situation like this?
Well, as I mentioned, I think, even before this interest rate rise, I mean, Russia in this sort of low oil price environment was in for a very rough ride indeed. I've seen economic simulations that suggest that, at $60 a barrel for crude, Russian economy would contract by 4 to 5% during 2015. With interest rates at 17% instead of 10.5%, you're going to get a bigger impact on the Russian economy at the moment.
But,
for instance,
Mike, it's not just the Russian economy that is affected by oil prices.
Yes.
There are other economies, global economies. So let's take an external look and look beyond Russia. What are the repercussions there?
Well, it's quite complicated because in theory, cheaper oil for the world is a good move, and it's reflationary. But the problem is with inflation so low, it might push some central banks like the ECB into doing something they don't necessarily want to do. And looking at it perhaps another way, with oil being so low and the Russian economy frankly in trouble at this point in time. It heightens geopolitical tensions. There were some comments, I think, by Sergei Lavrov earlier on in the day about maybe moving nuclear arms into the Crimean Peninsula. That is certainly not going to do the investment and environment any good at all, and it's also going to impact consumer confidence and actually weaken growth. So there are a lot of factors in play at the moment, and certainly we're going into 2015 with a lot more uncertainty than we were expecting only a few months ago.
Well, as I said earlier, it's still a waiting game, so let's wait and see what happens as indeed the ruble takes a roller coaster ride there. Mike Ingram, market strategist at BCG Brokers in London, thanks so much for talking to us.